Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid. Such a sucker, sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, retail trading team. I'm Mastro, and this is your routine briefing. So let's jump right into this warm-up document, see what we got going on today, and find these lovely opportunities in this beautiful, lovely, and divergent market. So it seems like lovely is going to be the word of the day. I've already said it twice, probably say it at least 2 more times. So if that's on your bingo card, there you have it there. So I'm going to go ahead and switch screens, pop over to our charts, and I'm going to pull the warm-up document over just a second. So there we go. So hope everybody's having a lovely Thursday. Nice interesting day yesterday. We did have the second day that we closed outside the expected move. I note this in the newsletter as well. Very important to remember. This is one of my favorite little statistics in that feature statistics section on the newsletter, retailtraining.com, if you're not already a subscriber, which is that outliers, i.e. expected move anomalies, cluster. So today we're kind of in the middle, not kind of in the middle, almost directly in the middle, in fact, of the expected move range right now. So if we do start to get to one side or another, yes, it is a higher probability trade, yet if we see an extension, significant extension, especially to the upside, I would think today, don't be surprised because, again, those expected move anomalies do cluster. So just want to point that out. You can see this document in the description of this video, as well as my other resources that I like to look at. And most importantly, for anybody who's interested in checking out the strategy, that's going to be in the routine day trading document. So let's do a quick review. Pull my chart up here, confirm that we do have that open test drive bearish. If you recall yesterday, we had the open test drive bullish, which was unwound. So now that level to trade around and to watch is going to be 36 on the upside. Bears rather do retain the momentum until we pop that 36 area, and then it's possible that we do change and start to rotate up, favoring our friends, the beaten up bulls. So another interesting fact is 10 of the last 12 trading days on ES have closed red. So it's very uncommon, and I don't know if it's significant or not, but very interesting losing streak. Apparently, according to the seasonality folks, August is often a bearish to choppy beginning of the month, ending with a bit of a bull rally toward the end of the month, which means the month itself resolves pretty neutral. So so far that seasonality is tracking. We'll see if that continues. Really just watching, I think, really for a bullish trade today. And we'll talk about the areas for that bullish trade in just a sec. I just want to point out these are expected moves. These are the SPY levels. And yeah, besides that, up and balanced overnight inventory. So today's actually the foil of yesterday. So yesterday we had the down and balanced with an open test drive bullish. And today we have the up and balanced open test drive bearish. I don't really take too much out of that except that open test drive, that high of the RTH session so far going to be an important level. Just kind of besides that, we may see this bouncing type action that we've been so used to for a couple weeks now, several weeks now, in fact. So that's what I got going on the warp document. Again, description of the video along with all the other fun little resources there. So let's look at some of the tape action, and let's start just on the weekly chart to get our bearings, so to speak. And really the most important level that I'm looking at on this weekly chart is that 436 level. So I keep referring to value. That is the top of overall value, just very simple. It's a volume profile drawn from the highs of last year. So right now that value area high is 436. We are in a state of imbalance. We have been in a state of imbalance since June, and so usually how that resolves before going up or popping back into the balance area is we get a retest of that high. So right now it's at 436. That can definitely move up and down, but more likely up because tape is higher than the balance. So we'll be watching for that. And really, we're just kind of filling out this bull flag for now. So you can see it's very clean. Look on the daily chart. The trend lines are a little different on that weekly. So for the trend lines, I like to look at the daily here. So we did break below this channel, and this channel comes from kind of the March lows there. So you can see right here, that's that March low. So we're both below that October 13th trend line now and below the trend line from March. So that is some more supply adding to the bear case. Yet again, we are still in a bull market and we are still in a state of imbalance on that weekly. And what that means in a state of imbalance is that the buyers are definitely dominating here. So nice for the 4 sigma view up. I just noticed this. We're officially back below it. So you remember when we were up in the stratosphere here, I said every day that you never stay above 4 sigma VWAP for too long, and you very often see a pretty dramatic correction relative to significant expansions. And as raw price, not percentage, but as raw price, this expansion has been more significant than any that I could find going back to 1998. So there may still be more downside for sure. Yet it's just important to remember, I think, that we do have 10 of 12 red days in the ES. Right now we're still kind of hanging on green, but 10 of 12 days in the ES have been red. So I think we're due for a bit of a relief bounce. Maybe not, but as long as we're in this bull flag and as long as we're above that, what is currently 436 area, above that value, I still think that we are in a convincing bull market. So that's just kind of the macro look. That's what we got going on. We're also below the 50 SMA, I just noticed here. So definitely some good supply above. The bears have done some damage to the bull case, yet the bull case stands until we pop back into value and you start to look for that setup 1. So I talk about these in the newsletter often. I don't really talk about in the briefings too much. These are just the setups I look at. There's 8 of them. The reason that 4 is not a setup is because you want to avoid trades near that POC. So 1, 2, 3, 4, 5, 6, 7, 8. So setup 1 is simply your outside balance. You pop back in, you retest it, and then you move back toward the bottom. So that would be the bear case, and that would be a really significant correction, perhaps even a resumption of the bear market, if that's what we want to call 2022 pullback. So that's kind of what we're looking at. I'm really expecting more of that setup. Where is it? That setup 3 type look where we're outside balance, we pop back, we test it, and then we resume the bull market. And why am I not bearish? Well, a lot of that does have to do with volatility. So I'm going to go out of normal order here. We're going to go look at that volatility chart because we have not moved since yesterday. So right now, as we kind of sell off in the market here, we're trying to pop back above that 18 area. 18 is kind of my pivot for volatility. Yeah, we're still filling out the triangle. You're not seeing that speed and aggression, and we're still within less than $2 of the yearly lows, despite a pullback of about 100 points, 200 points rather, from the high. So interesting to watch there in volatility until volatility really gets going. Getting above that 1980, we'll say right now, that 1980, really 20 seems psychologically important, right? Above that triangle, breaking out convincingly. I do not think that this pullback has the strongest of legs, so we'll see. We will see. We could just keep grinding down and volatility could stay depressed. You never know. So that's why I watched those key levels. That's why I was watching that 443 gap. We've popped through it. We're now below that trend line. Top of value currently 436 remains the next level, and we just kind of take it as it comes. So speaking of magnets, here's a structure chart from yesterday. I talked all day, well, really I've been talking all week about how once we lost that 443 in the SPY, that 4400 to 4410 area became the magnet in ES, and you saw a perfect bounce off that last night. So Globex, Asia, Europe got that perfect trade. That was really an A setup, just kind of rejection of that magnet area. So we'll see if we get a retest, which will be the A trade for today's RTH session, would be an overnight low trap there, popping back below that 4410 area and then recovering. I like that for a demand grab, which you can see that is since we were just talking about the warm-up document, let's pop back to it. Demand grab is this setup here, better known as setup 8. Or excuse me, I think, let's see, 1, 2, 3, 4, 5, 6. Yes, thank you. Setup 6. I don't know. I have to check my notes which one I have set up. But point being is it's this little pattern here where you test support twice, pop through it. That's the demand grab, and then you pop back out. So be looking for that at the overnight low as well. Second trade, if we do get a rally here that unwinds that bearish open test drive, second trade I'll be looking at is just going to be a fade somewhere in this zone here. So I don't really like I didn't take the short this morning. I don't like anything near this 35 area. This is a pivot, but if anything, I'd be looking for a B trade. So notice A versus B. I know, really clever. A B trade would be that a reclaim of this area and then a move toward this 4460. The thing is, again, looking at that expected move, I'm not a big fan of getting involved near the edge of that. So I will fade the edge, especially considering the trend is down, yet I'm not huge on the buy side around here. So it is technically a B setup, so not a crazy trade to take. Yeah, I do favor more of a fade of the upside if we do get a push here from the bulls. Those are my two Occam options today. If neither of those play out, I will just not take a trade. It's fine. It's been a really good week. 3 winners, so I think the past 3 weeks I might have had 3 trades, so can't complain. Tomorrow is OPEX, so often very choppy. Be aware of that. We'll still be here though, looking for those trades. Just gotta plan them out and take react, not predict, as they say, to whatever setups do appear. And I think that's all I got. So pretty straightforward. Just looking at our levels, watching to see what happens around them, and hanging out and enjoying life otherwise. So speaking of enjoying life, I'm going to go pop on Twitch here for semi-enjoyable, depending on how you feel about my rough transitions, little DJ set. So come hang out if you want to do that. And I'd also appreciate, by the way, a like on the video. Helps with that YouTube algorithm and our quest to get back to double-digit views. So thank you for anybody who has been consistently watching this, consistently reading the newsletter, consistently providing your attention. I really appreciate that and any engagement, be it replying to the newsletter, in the comment section of this video itself, or on Twitter, where you can find me at Routine Trader. So yeah, so just feeling grateful once again. And I'm not going to predict, as Mr. Juiceball says in the chat here, but we are going to hopefully catch a trade. So we'll see. Like I said, I'm going to go hop on Twitch right now. Stay classy until tomorrow.